Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's morning call.
And I'm Chelsea Oliver. We have mostly green arrows around the world today as Europe has some follow through to yesterday's strength. The DAX is up another 1.3%, Asia, the Nikkei is up 1.5%, and Hong Kong up 2.7%. It looks like overseas is giving our futures some upside follow through.
Yes, because the last few weeks we've seen a lot of pressure on Europe. So yesterday when Europe ignited and the pound had such a big move and it looked like Brexit was off the table, it helped our markets and they're getting follow through. And that's what traders like. Traders like follow through. And Europe, like you said, is up another 1.3%, and even the Nikkei bounced. So the question is, where's the next resistance and where can it go? So let's take a quick look at the EWG. The EWG, which has been trapped in a downtrend for a long time here, basically, it's not that symmetrical, but looks like it broke above it and kind of held right there. So here you are with this move off the lows. I guess you can now treat this as your new big support pivot. This is the spot, this 25. You had a nice igniting bar yesterday, and now it seems as if it's going to try again to take out the 200-day. So we'll see what happens here if the EWG gets up to 26.12. But all in all, nice little pivot here, a decent gap up yesterday, and it's nice to see for those people long Europe, they're getting a little extra, follow through. As far as, like you said, the Hang Seng in Hong Kong, it hasn't been great, but at times it's more of a tailwind versus a headwind, and it's been this too, trapped, you could say, in a downtrend below the 200-day. But now you could draw your line like this, where here is your new pivot. Yesterday it poked its head above this small spot, basically probably thinking it could rally with our markets, and that's what happened yesterday. And today you're probably getting a little follow through. So the FXI probably has some room up until to fill this gap, and then we'll see. Who knows if it could work its way back towards the the April high. So at this point, it turned up yesterday, and now there's some room to figure out whether or not every day we wake up and we see green arrows around the world, which would be helpful, for our futures.
U.S. markets had a big day yesterday as the S&Ps ignited above the 2060 level, opening the doors for higher prices. S&P handles are now up 8 to 9 handles this morning. Do you think it's a better buy or sell here?
Well, you have methodical moves. Last week we were pretty bearish. The head and shoulders top, break below 2040, and then on Thursday and Friday, things changed. And things always change. And I talked about it on Twitter. It's been in my note. When we broke below 2040 and 2033 and reclaimed it on Thursday, that's when we got out of our shorts and we tested some longs, thinking, we can get a bounce into the weekend. But the question was that just a bounce into the weekend, or will there be more? You look at the chart here of the SPX, and this is pretty much a classic red dog reversal, where you come in, you trade below a prior area, which right here was 2034. It made a new low of 2025 and reclaimed it. So basically from 2100 down to here, the 200-day, not a bad spot to cover. And then you had a little bit of follow through on Friday. And then remember, everyone was complaining about that narrow range bar here on Monday, which definitely was a little slow, and you had to just basically not get too frustrated with it. And then yesterday we talked about can the SPX break and close above this micro trend line. It happened fast. So hopefully, I don't think anyone was short. It was just hard to grab longs real fast. So at this point, you had a nice igniting bar. If you want to draw another, descending type channel here or trend line, it broke through that also. Right here, look at that. It took out this 2070 one area, which was your next spot to show some power, and now it's opening above here. So this resistance right here is 2084, which we're probably right around, and then you have the highs of the year. So does this igniting candle open the door to a move back up towards 2100? It could. Last time, just to show you, it looked like we were going to do that, and it got negated the next day. This time, closed strong, and we're actually opening up. So if you have longs overnight, I would trim into this open, considering this is where we were last week. And I probably wouldn't be buying the spiders on the open, but if you're looking to short, make sure it's cute, because a move like this can continue to go. And the last thing you want to be doing is keep looking for a cute type trade when maybe this new move has some room, because if you look back even further, I'm not saying we're going to break above the range here, but we haven't broken above this for 2 years. So at some point it might get going, and you don't want to be the guy just looking for cute shorts when stocks are acting well, and you could have some kind of portfolio approach on that could pay you besides just tactically trading. So here was your spot to switch gears. Here was your spot to maybe add to some longs, and then I would say into this up open you trim, and then we'll see how we hold up.
We have a lot of participation among sectors, and it was good to see technology reclaim the 200-day. What are some new levels of resistance in the Qs?
Remember we said how we like when technology leads, especially to the upside, not the downside. Well, yesterday it took back the 200-day, which is good. That's a healthy, a healthier sign. You look here at the Qs and you'll see that there was a nice tight pivot here, and it had to do a lot of work to get above. Okay, here is your support. Okay, this is, remember we were talking about would this 104.50 hold? Well, it did, and then yesterday it reclaimed this entire pivot, putting it back on track and making it act a little bit healthier. So the question is, what's next? You're getting a little bit upside follow through. So really, here is, this is the high of the year. Okay, this is a nice clean trade. Here is your, red dog reversal. Here it came up and, held in, didn't fall apart, and then boom. So now I would say with this upside follow through, you probably have resistance coming in right here, where you want to maybe sell a little bit into it, which is closer to 109.40. And if you want to try a little, 5, 15, 30-minute cute short, like just say it goes up to 109.50 by 10 o'clock, comes down to 109.25, and you want to short verse that for a little bit of a pullback for then some sideways action, that's probably what you have to do. At this point, I would not be buying the Qs on this up open, but it doesn't mean it's going to be an easy short.
Small caps also reclaimed the 200-day. Do you think that it gets back to yearly highs in the IWM?
In order for the S&P to have a clean breakout, you need participation. So like you just said, technology back in the game. The Russell also back in the game, the IWMs. You look here at the chart. This too, also a big clean move above its descending channel. And when things are correcting, we like to talk about descending channels because when they break to the upside, anyone who's been shorting against the channel gets squeezed. So now you took back the 200-day, and I would say let's hope that it holds above this going forward. You're getting a little bit of follow through. Here's your next level. This is like similar for all the indices, I would say. Now, after you had your red dog reversal last Thursday, it woke up on Friday, put it on the map, narrow range bar on Monday, and then boom, follow through. So into this, I would say on a small 3 to 5 minute scale, you probably might have a little bit more success fading into this, or at least selling some longs and then waiting to see. But all in all, it's good to see the Russell back in the game. And if you remember, we talked about the bios, how it could be a decent buy if it took out this lower level here around 265. Well, now look at it. So at this point, coming back into resistance, would you be a buyer here? I would say that it's probably going to, I would say if you were long here and you held yesterday, I would trim into this. And then also, if you're looking for a cute short versus a 5, 15, 30-minute high, just make sure you do it versus a level, because if it starts to continue, you don't want to just be fighting what could be, a new trend or at least a new move back up to here. So this is a spot, and again, today, 1, 2, 3 on the fourth up day, I'm a very hesitant buyer on day 4. You're better off taking some profits and maybe looking for a cute short, but don't stay too long.
Banks have held in very well, and we've gone over some levels in the XLF and names like JP Morgan, Citigroup, Goldman Sachs. Can you revisit those for us and give us a look at those charts?
Well, the last few days worth of strategy is, can they hold half of last Wednesday's move? And then if they hold half of it, can they take out the highs of Wednesday move? And some of them are in the process of that. So hopefully there are some guys that are in the banks, because we've been focusing on it. And I'm actually in JP Morgan and Bank of America since before yesterday. So anyway, you look at the chart. Here's your XLF. Okay, nice move above all the moving averages, which to me is technically more solid than in the past. Here you're below all of them. Now you're back above them. Nice move yesterday. So you'll see what happens here into this pivot. It did hold halfway of that entire engulfing bar. So then you look at something like JP Morgan, which is best in breed. It held. Remember, I'm like, oh, if JP Morgan could hold 62.90, maybe there's more upside and it could take out this flag pattern. Well, it did it yesterday, and now hopefully we'll see some continuation today. I'm still long, and I'm longer from here. I added yesterday. I'm long overnight. I'll probably trim some and hold some. Some other names haven't taken out that spot yet, so we'll see if there's enough power for it. Bank of America, I'm also in. Actually, I might even add to Bank of America. I won't add to JP Morgan today, but if Bank of America can get above this spot with some kind of force, with above like 1490, maybe there's a move back towards, 15 plus come the end of the week. So this is acting somewhat well. I think Citigroup also is acting somewhat well. It actually, held halfway here. Okay, I'm not in Citigroup, and it looks like there's room up until the 200 day. I think Mark is in it. So see what happens there. And lastly, Goldman Sachs, which has been a laggard, it likes to wake up at times, and I guess you could say, there's a descending channel here. And if the banks continue, I'm sure people will be like, oh, what about Goldman Sachs? Maybe there's a trade there. And if you can get above this like 158 half or 159, maybe it plays a little bit of catch up because the highs here are, about 8 points away.
There's been a lot of action in high beta tech. Scott, are you happy that Facebook and Amazon finally woke up?
Yes, and to me it was like, why is Facebook and Amazon pulling back when they've been best in breed, but the market also pulled back. So yesterday when the market kind of ignited, everyone's like, oh, we got to go back after the leaders. So if you look at Facebook, Facebook wound up holding this key spot, which we talked about yesterday, and was a little bit more of a trap, okay, and I did get long it, and I'm still long it. So now the question is, can it trade above this spot and get back towards highs? So at this point, I always sell a little bit pre-market, and I'm going to try and hold it. Hopefully, if Facebook could hold above this spot, which is like 117.75 or 118, I'm definitely going to stay in some, because if the market stays strong, I don't see why this wouldn't try and go back towards the highs. I'm also in a little bit of Amazon. Amazon, nice little wedge formation. It corrected a bit. It held the 8-day. I would think that if market wants to stay up and strong, that there actually could be another trade here, for Amazon if it could take out and hold above 707.50. So 707.50, if it closes above there, maybe it makes its way back towards those highs.
And now even, so names that missed earnings, like Google and Netflix, they've had some pretty decent tradable setups. Is that right? Yeah,
I think earlier in the week we talked about Netflix. If it can get above 93, there could be a lower level trade to the upside. They call it a catch-up trade. And Netflix gave you a lot of follow-through if you were in it. I missed this one. Happens. And you look here at Netflix, wow, what a move, right? This Netflix took out this descending little channel here, and then this is when we had it here at 93.50. Boom. You had your, wake up, add, sell some. If you're still in some, congratulations. Now it's going to contend with this earnings spot. Do I think you buy it here? Probably not. Okay, you know my rule. Here's 1, 2, 3. So on the fourth up day, you don't want to be starting a new position here in Netflix after missing that. Even though if it goes higher, who cares? You missed it. It's too wishy-washy. It's just too dangerous. So anyway, this is your next pivot. Your next pivot here in Netflix is 101.37, and then yesterday's high is 99.14. On a different front, Google had a nice day yesterday. I was really close to taking it home long, but I just had too many positions on. Here is, that the spot, the small, like little descending channel in here. First day up, you would think that it could at least get to here. So if you're in long, maybe trim some ahead of this, which is 740.80. But I just wouldn't be just shorting this because it is, Google, and they might give it a pass, and it's still in this big channel of accumulation and still considered best in breed. It held support. It's working its way up, and if the market wants to continue, people will be like, oh, I got to go after Google because I might be buying it 3 months from now above the highs. Maybe there's a trade down here. So Google also tactically, is looking okay, just like Netflix was earlier in the week.
Today could be a tricky day for BABA, as yesterday it broke above a key level, but there is news of an SEC investigation that has shares lower. How will you handle this?
I woke up this morning and I saw it on Twitter, and I'm like, oh, really? I'm like, Bob, it's been such a frustrating stock, and finally it broke above 80. So I did take it home, and that's the right trade to do. I didn't know an SEC investigation was going to happen, and if you have it long, either did you. So I think the stock is down like $2. I did get out of a little bit, just higher, but I'm in more than half, and what I'm going to do is I'm going to let it put in like a 5, 15, 30-minute low. It could try and bounce. If it tries and bounce, I'm going to say, okay, I'm in it versus this, but if it breaks that low, I'm out of it, and I probably will never trade BABA again. You look at the chart here, and it's just, what a clean move. That's friggin' gross. Clean move above all the moving averages. I don't care if it's BABA. You know what? It was worth a try. Okay, so now yesterday's low was 79.07. I think it's a little bit below it. So we'll see what happens if it trades and closes below this. There's a lot of people trapped, and a lot of people are going to be upset. If it holds this and tries to come off it, maybe, it's not like old news. I feel like there's a lot of investigations into BABA, whether it's counterfeit stuff, whether it's this, whether it's that. So I was a little surprised to see it down $2, based on that. But there are some companies or firms that have covenants that can't be involved in things that have an SEC investigation, so maybe they're selling it blind. So I would give it a little bit of time, and if it trades below, lick your wounds and just get the hell out of the way, and that's that. Things like that happen.
Right. Now, Tesla didn't really participate yesterday, and
well,
Tesla.
Well,
not much going on. It was out of play. It held its secondary price.
Right. Well, that's
Is there a
it.
strategy?
Well, the strategy was, yes, would it hold 215, which is the secondary price, and usually there's support there from the underwriter. So if it would have broke that, people who were long it from the secondary, but oh my goodness, let me get out of the way, but they supported it. So today I think RBC did downgrade Tesla, but it's not lower for now. If you look here at the chart, it's not blockbuster, but it's holding this area, and it is Tesla. There's a lot of shorts, and people are still fighting this. It's below the 200-day, so I'd say as long as it stays above this 215-ish, keep an eye on it, because if it starts to go again above this spot, maybe there's a better move, but you have to make sure there's volume there. But for today, it's up a little bit. I know it was downgraded. I wouldn't do too much there as it tries to prove whether or not, it's going to, just be out of play and take a lot of time to absorb the offering, or, if people are in, they're in, and the shorts get squeezed. So first spot of resistance is 218.74, and then really there's room up to 222. But I'd make sure that you watch the composure of the stock, because it changes in the first 30 minutes many different times.
In mega cap land, Apple has been on a tear ever since Buffett's announcement of his stake. Do you think that there could be a strategy if it starts to sell or it starts to trade into the earnings gap?
It just comes such a long way. What you really had to do is, once Berkshire, announced their stake in Buffett, you had about 20 minutes to switch gears from short to long above that 92.50. And if you didn't get long on that day and just covered, there's been lots of opportunities with Apple ever since. And it's up again today, so I would not suggest buying Apple today after a move from 90 to almost 98. But, those trying to short it aren't feeling so good. If you look here at the chart, okay, we talk about the 8-day moving average. Well, here, it broke below 92 and reclaimed it. That was your spot to switch gears and say, you know what? It could have broken below 92, stayed below it, and gone down into the 80s, but it didn't. Move on. Then it took out this 92.50 area, and that was your spot to say, okay, let me get out of the way and see what's next. And what did Apple do next? It didn't fall apart. It held the 8-day moving average, and then it's trended up. And now it's extended. You have day 1, day 2, day 3, you're on day 4. You know my day count rule. I don't like to be buying on day 4. But here is a very big gap. So the question is, does it want to fill a portion of it? All right, all you know now is the pivot there. The pivot there is 98.71. Does it push above it and come back below it, show some relative weakness, and then that could cap this move from the lows? Or does it push above it, stay above it, and grind its way to close the gap? Nobody knows that. All you know is your pivot, and we'll watch the way it trades. I personally would not be looking to buy Apple, even for a cute thing. But if you're going to short it versus a 15-minute high. Do not play the roll-up game, because who knows? If you remember, prior to earnings, this thing was as high as 110 before breaking this ascending channel and losing the moving averages, which now it has the 8 and the 21-day back.
How do some of the other mega cap names look to you?
Well, IBM, right? It missed earnings and it's coiling. I don't know if it's going to need a catalyst or some kind of news, but IBM, the chart looks pretty good. And if the market wants to continue higher, they're going to need some, some participation. And right here, you have a pretty coiled IBM. So is it slow? Yes. Maybe is it a day trade? That's hard. But if you want to be long it versus 147, maybe that's a decent idea. And then if it happens to break above this descending channel here, above 148.75, it could give you a move back into the 150s, which would be a good trade, and that's what we look for. Microsoft, decent day yesterday, engulfing day yesterday. Look at that. And now you have this pivot area and a big gap ahead of it. So with that being said, I would say try not to be shorted after a day like this. And maybe there's a little extra room here above 51.96, and then you have the earnings gap right there. So as a lower level trade, tactically it looks better. And lastly, let's talk about CRM, which has been best in breed. I don't know if it's exactly a mega cap name, but it gapped up after earnings, looked like it's trying to break out again, and at this point, if you're long adverse to gap, stay in it because it hasn't really stretched, and it looks like it can. I'm not saying it's going to be like NVDA, but look what NVDA did after earnings on that big gap up. Boom. So you don't want to just try and fade things because you think they're up, but maybe the CRM, which I'm actually in, I'm not in Microsoft or IBM, I think there could be a little bit more upside there.
Metals have been under pressure ever since the hawkish Fed statements. Scott, it's a good thing that you said to sell back the GLDs when it broke the 121.50. Do you think that there's opportunities to buy back under the 117 with support, of course?
Yeah, well, if you sold when upper momentum leaves, you could try it when big support comes into play. And that's what we try and do here. We try and show you when to get out when momentum leaves, when the 8 and 21 day is broken. So maybe you could try something at the 200 day. So if you look here at the GLD, on this day when the Fed came out hawkish, here you go. That was your out. You also had a pen in here besides the moving averages, and now look where it is. So the question is, can it hold a bigger support down near 116? It's worth a try. Down 60, 70 cents today, I probably wouldn't be pressing it short. Your time to have been short was right here. Okay, that was your time on the break, and now I would say into this spot. I would at least cover the first time it gets here and maybe look for a little long, and that's near 116. The miners also got, obliterated. Obliterated, that's a bad word, but, also came in hard. Look at this engulfing bar when it broke the 8 and 21 day. That's what we talk about. When momentum leaves, you leave. And then it stayed under it for a half and closed on the 50 day. And now there's not a lot of support here. Maybe there's something down, close to this 2130. But down open today, I guess the strategy would be if you were short yesterday because it closed weak, cover some, but happens to reclaim this 2244, like open down and go like this, maybe there's a small tactical long considering where it came from to where it is. But just be a little careful because a lot of momentum's been lost in the metals.
Right. Do you have any more closing thoughts for us?
A lot of people complacent about the market. In the last 2 weeks, we heard all the big guys out there adding to their metals and their miners and adding to their spider shorts. And here we are, miners coming in and metals coming in, and the market just had a big move. So, I wouldn't go with what you read. I would continue to, read the technicals versus other people's strategies. We just had a big move from, 2025 to almost 2090 in the S&P. There's been tradable pivots. If you did not participate, I do not think you should be buying today's up open. It might not be the easiest short, but I think there's more of an opportunity, maybe acute short in some of these sectors. And in a day like today, you want to see, what could hold up because individual stocks can continue to move. If you're in 8 to 10 names like I am and you have a crap name like Balba taking some money away, it is what it is. I'm going to figure out if it could bounce. If it can't bounce, I can get out of the way, and it's unfortunate, but that happens in trading. If you're in other names, you don't let it affect your other names. Don't just sell a winner because something else is down. Each stock in each situation, treat as its own. Let's just take a quick look at the spiders before we end because we went over the SPX. Nice move in the spiders. Your next area, which it's a little bit above, was at 208.50. Okay, so see what happens here if it comes back and holds. This is actually 208.50, and then really here's your highs. A really nice move yesterday. We talked about this, we outlined it and took it back, and hopefully you participated. And if we do open up and come in a little bit, maybe we get some kind of doji type day. Let's see if I could draw it for you. Maybe we get some kind of doji type day like this, go sideways for another session or so, and then make our ways back towards the highs. But all in all, from the red dog reversal to the inside day to the micro igniting bar to where we are now, those 3-4 days are the days that hopefully make your month and could make your quarter if you're involved and you get there fast. If you didn't, you know what? Still got 2 quarters left, a lot of moves like this to go. Don't overtrade, don't get too frustrated, don't get too heady because you'll never see the next time it happens.
Great. Thanks, Scott. Everyone, have a great trading day.